one of the questions that came back most frequently was advice around how to save money on tax that we're all paying. So can you give us some tips around how to save and reduce the tax we pay each year?
So this goes into tips 3 and 4. The best, I suppose, short-term tax vehicle for anyone who's earning over 40,000 a year is a government-backed scheme called the Employment Investment Incentive Scheme, or the EIIS scheme. And it's become, I suppose, more mainstream. We've been pushing this for the last number of years. It's been available since 2011. In its improved, modified form, which Pascal Donoghue essentially announced 2 years ago, it enables an individual who has 5,000 euros in the bank, who's earning over 40,000 a year, to benefit from investing in an Irish company. There's about 70 each year that look for this type of finance, where the government will give you 40% back of tax that you've paid in that calendar year by virtue of you investing in an Irish company. And there are some very, very strong companies. We have spoken extensively, and there's a couple of examples there on the screen. Blacks of Kinsale is a Cork-based company, Halo Care, who are a medtech company, which we have basically narrowed down this market. And the key opportunity for people is that by investing 5,000, you get 2,000 back from the government, with the view that at the end of the 4 to 5 year period, you get your 5,000 back plus interest of approximately another 20%. It's a double your money scheme, and it is something that, again, to answer the question about getting tax back, I'd encourage any higher rate taxpayer to at least consider. You can make an informed decision based on the companies that are being presented, and this is our role in Alpha Wealth as an independent broker. The second, I suppose, tax scheme, and one that people sometimes may not necessarily realize how advantageous it is their pension scheme. Many of you may have a pension through your work. You may have an independent pension scheme. And the key message really for this evening is that if, again, you are subject to tax at a higher rate, i.e. you're earning over 40,000 a year, you can get 66% of a return by making a contribution into your pension scheme. It is enormous. People often ask me, what is the best investment? And I say to them, it's by putting money into your pension. And what probably turns some people off is that they don't necessarily fully understand the nuances of pensions, or they don't like the risk. You don't have to take risk with your pension. You can stay in a very secure account. And more importantly is that you can access your pension scheme from age 50 onwards. It doesn't have to be this thing that is so far away that you can't visualize it. And it needs advice. And this is where I would encourage all of you to maybe make sure that you're checking in with an independent financial advisor and getting appropriate advice about where you are today and where you're looking to get to. And that's something that we help our clients with.